Welcome to Deluxe FX Portal. I am Steve, the digital presenter of Deluxe FX Portal, a leading trading educational company owned and managed by Nelson Onyovosa. In this video, I will be breaking this pair down from a technical and order flow perspective to try and understand where we will be having highest probabilities of the next potential move. And in doing so, I will provide free education as free as possible. Disclaimer: it is important to know that all our accounts on different social media listed below uses only the name Deluxe FX Portal. There are no numerical digits attached to any of them. Let's go straight to the charts. So let's make a full breakdown of the situation that we currently have on EUR/USD. Now, starting here from the monthly time frame, what we can see is that, at this moment, the market is testing the psychological level of 1. And when you have a 1-to-1, that is a very important psychological level which the market could reject to the upside. Specifically, when it comes to upside targets, we would have the first upside target at this previous monthly support, which is now turn resistance. So there would definitely be the possibility for the market to go and test this level. Dropping down on the weekly time frame, what do we have now? From a weekly perspective, we did have the creation of this M pattern. I spoke about EUR/USD after the creation of this M pattern when the market was around this area. I explained all the reasons for which we would expect this move to the upside for the completion of the M pattern at the neckline. And now, that was what the market gave us. And by the way, I will link in our Telegram group this previous analysis, so you can go and check it out for more free education. Now that the market has completed the M pattern, where can we look for the next potential patterns to be created? Here in the weekly, it is pretty clear that the market is trapped in between the previous weekly support and resistance and the support that we have in this area. As long as we remain between these two levels, from a weekly perspective, we don't have anything interesting. Dropping on a daily, things could start to get quite interesting, especially if we will start to create new daily bullish structure. But at the moment, we do not have any kind of highs. At the moment, the structure is bearish, because the previous level of resistance, which was this one here, is now again acting as resistance here. Therefore, the market could easily reject it to the downside, and we do not have anything interesting. Now, if we go and see what we have when it comes to the commitment of traders, which is the COT data, which is what the non-commercials, the biggest speculators in the market, are doing. If we check the data for the euro, we can see how with the last reports, net positions started to change. They started to get an increase in net positioning with 8.3k shorts getting closed and 3k longs getting opened. What this indicates is that from an institutional perspective, there have starting to be some interest in the longing side with respect to the short side, meaning that the 1:1 psychological level could definitely hold as support from a monthly perspective, and the market could definitely create this move to the upside. However, we first need to see a daily break of structure, from bearish as it is right now to bullish. Now, that could definitely happen around this zone if the market here would create some high, for example a push to the upside and then a red candle. At that point, as soon as the market breaks above that red candle, we would have previous resistance turn support. And at that point, on the retest there we would have a very interesting probabilities for a potential rejection to the upside, for the market to go and create the move that we would like to see from a monthly perspective. So the rejection to the upside away from the 1-to-1 psychological level, and for the market to go and test the monthly resistance and upside target that we have previously identified. So if the market actually manages to create bullish structure and go for a retest of previous daily resistance to support, this is how we will be approaching this potential rejection to the upside. First, as usual, trading is reactive and not predictive. The monthly, weekly and daily combined with the COT data, those are the best time frames from a directional perspective. But however, when it comes to confirmations and entries, the best time frames are the intraday time frames, the 4 hours and lower. Therefore, if we can get the break on the retest, what we could be doing is monitoring price action from an intraday perspective, potentially also with students at the Deluxe FX Portal, during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have now to an intraday bullish market. and if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection to the upside and for the market to go and test our upside monthly target. Now, if you enjoyed this free analysis, education and update, make sure that you drop a like in the comment section and tell me the next pair you want me to analyze. It really helps in the creation of more free analysis, education and updates for all of you. Make sure you join our Telegram group for more.